Wall Street just experienced its worst day of 2019 as the U.S.-China trade war continues to make waves. So we brought in our favorite local financial professional, David Stryzewski. I've only known you for a year and a half now.
Sure.
From Sound Planning Group to talk about pretty much how to protect yourself in a volatile market.
Right.
So how do we do that?
Yeah, well, you know, the world's changing right now. Last week's trade tensions escalated to another level right now. And so basically China left the conversation and Trump essentially said that he was adding another $30 billion of tariffs starting September 1st. This caused the market to react, sell off. That's why we saw that volatility. We've been warning people that that's been coming for a while, and guess what? It's here to stay. Now, it's here to stay, not necessarily for the same reasons why most people might expect, though. See, think about this as an example. $30 billion sounds like a big number, but with the United States economy being 20 trillion and China being 13 trillion, 30 billion actually isn't that big of a number. It doesn't move the needle. See, what's actually happening right now behind the scenes is that the United States is asking China to come to the table and to sign an agreement that by law, they will no longer be stealing U.S. Intellectual property.
The patents and such.
Exactly. And then they're also talking about drop the sanctions on Huawei and all this. And so anyway, they're not even close to coming up with a deal.
With a solution. So this is going to be a long time.
Yeah, I don't think it's going to happen. See, we need to recognize that China thinks generationally.
Right.
Okay, they don't think in 1 and 2 years. They know it's an election year. They want to work with a new regime. And so as a communist country, they would actually probably allow their people to go to the breadlines before they would ever bow their knee to this president or new ideas and changing their economy in such a significant way, putting teeth into this system, specifically with the stealing of intellectual property. And so I don't think a real deal is going to get done, which means more volatility is coming in the future.
Really?
And so this is very important for us to be understanding right now, just given the fact that the world is changing and we need to be aware of those changes and then how to protect and insulate ourselves.
I mean, is this something you can predict when you're looking at this, long-term fight that we'll be having?
You know, there are things that we can do that can mitigate risks, right? So geopolitical concerns are very difficult to manage and to look at. Also, we're in the late innings of the longest bull market that the world's ever seen. And so this makes for a very challenging, time frame for people to be really looking at, where they're going, what they're doing. And so one of the things that we want to encourage people in is be a long-term investor. Okay. And what that means right now is that we want to be addressing and evaluating our risk reward, what we're going to be investing in. And so what we've done in our portfolios is we've tried to mitigate some of these risks that can come along with tariffs with China and everything else, and invest in areas where there's better potential for upside while reducing some of those specific risks that we can recognize.
So I remember when the recession hit hard, I had so many friends and family members and colleagues who were literally right at the end of retirement.
Sure.
And it devastated. I mean, they had to work years and years longer.
That's right.
How much does age come into when you're preparing for the investment future?
It's a massive
like
deal. There's 10,000 baby boomers every single day retiring. And so, we can't afford for our 401ks to become 201ks again.
Yeah, absolutely.
Right? And so we need to be investing for our age, understanding where we are in a market cycle, as well as understanding where we are as we begin to transition from the accumulation or saving phase into the distribution or spending phase in our lives. So we need more protection. Of course, the challenge right now is that, if we go to more protection, like places like bonds, they're yielding nothing. In fact, interest rates just significantly reduced again, and we're now at 0.0 nothing returns in what is, quote unquote, the safe place in our portfolio. So there's a lot of education and things that we need to be recognizing as far as where the opportunities are, where to capitalize.
And finally, we're saying about control, just whatever you can, right?
Right. So there's a lot of things we can't control. Can't control the volatility of the stock market, the up and downs, the daily beauty contests, but there are things that we can control. And so things like our spending, which is, of course, another fancy word for budget. We can look at our risk. We can be dialed in for the right reasons in the right way. And so if people go to our website, myretirement.tips, we have on there this personal financial website, which can actually help people to be able to dial in that spending, those budgets, and really control certain things, like taxes as an example. These are things that we can make decisions upon that can have outcomes that can have significant impact on the future. We just need to take the time to quantify and really sit down. And so at Sound Planning Group, that's really what we specialize in, is educating, empowering, showing people how to create this retirement of their dreams while understanding some of the common things that we're facing today that might be game changers based on issues we've seen in the past.
Yeah, and like you've said before, a lot of us say we don't even have the ability to budget, we don't have enough money to budget or something like that, and you actually say that's not always true, and you can help figure it out.
Absolutely.
David Stryzewski, thank you so much for being here with us today. So much information and good background about the U.S.-China trade war. We will be bugging you about that again in the future.
Looking forward to it.